Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 Fund Data Fund Grade A Plus Award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Well, it's great to be back.
Ted, do we have any feelings on the direction the BC and Canadian economies will go in 2019?
Well, in terms of investors, I think they have to focus on the oil patch primarily because it's such a major part not only of the Canadian market, but will also help determine, what the Bank of Canada is going to do, which will impact other areas of the market, including consumer spending, depending on what they do with interest rates and just overall confidence. So, in terms of where we stand with the Canadian oil patch, I think the good news for investors is that just about every piece of bad news has been put into the price. Now we've had a little bit of a rally here, so some of that's come off. It's been overdone on the downside. It's like investors expect the Canadian crude oil to go to zero along with natural gas, and that we'll never ship another barrel of oil out of Alberta again, almost. But not quite that bad. But certainly, there's been a lot of negative news priced in. Can it get much worse? Sure, it can always get worse, but chances are it's going to get a little bit better. Is it going to be enough, though, to boost the Canadian economy and boost the fortunes of the Liberal government going into the election? That is, I think, a 50-50 proposition at best.
Well, I've noticed that Western Canadian Select oil now is only $7 or $8 below the world price of oil. Is that good news for BC and the rest of Canada and Alberta?
Well, if it's sustainable, it's very good news. But the problem is this has been on the back of a manipulation by the Alberta government to cut back on production. So it's not a sustainable answer. The sustainable answer will be to get more pipeline capacity so that Alberta producers can get their resource to more markets, so that the people who own the resources in the ground, including British Columbians in BC and people in Saskatchewan and people in Alberta, that they can get the full price for this. So it's very important that there be more progress made on the pipeline situation. Right now, the federal government is kind of throwing its hands up in the air and said, well, we have to do what the courts say, and we have to, kowtow to all these special interest groups that go running off to the courts and find a judge who will be sympathetic to them. So it's still not a great state of affairs, but the point being, if you're an investor, a lot of that's been baked in, and eventually, one would hope there will be some political progress made, Jim, on that we will get the Trans Mountain built, and I think we will, despite all the forces in the Liberal Party, I think, trying to stop it. I think there's a huge contingent, and I'd be happy to hear from, Liberal Party supporters who are listening to this, to prove otherwise. But I think there's a huge group in the Liberal government that really are quite happy the way things have unfolded with the oil patch. That there's that the Trans Mountain is stalled in this process. I hope that group and I hope those that contingent who are if not actively trying to work to that end, but who are hoping that happens, are disappointed. I hope that we do get some shovels in the ground on the Trans Mountain, and I think if the Liberal Party thinks it can coast to victory by ignoring Alberta and hoping that it will pick up seats in other parts of Canada, I think they're going to be in for a big shock. But we have to live with the cards that are being dealt with here, and the positive aspect of it is the market has discounted a lot of bad news. And Jim, there's always a possibility that the politicians may change in Ottawa, or their attitudes may change, and we get some constructive work in the oil patch. So there is an upside risk, and I think investors are probably becoming a little too gloomy. I can understand why they're gloomy about the Canadian oil patch, but all that gloom, for the most part, is baked in the prices. What's not baked in the prices is any kind of upside surprises. So, let's hope that there are some upside surprises, because that would be good for Canada, it'd be good for investors, and we have a lot of social programs we need to pay for, and we have a federal deficit that has to be closed at some point. And it's just amazing that there's still people in this country who think we can do that by shutting down the oil industry. But yes, they are out there, and but they're still a minority. So hopefully we'll get some common sense back into Ottawa, and we will get some politicians who understand the urgency of getting the oil patch back ticking here.
Isn't the end of this month the end of the deadline that the courts imposed on reviewing the Trans Mountain pipeline?
Well, I'm not sure about whose deadline that is. I know it's certainly in the interests of Ottawa to move quickly on that if they really do want to get the pipeline built. And this is where, the litmus test will be for the Trudeau government. I mean, they've got to come to the plate here and get this thing moving. And, to be honest with you, I mean, it would be great if the Trans Mountain gets built, but it's only one pipeline. It's still, it's better than not having a pipeline. But, I mean, it's one pipeline, folks. Let's just get on with it, and, let's talk about what else we can do. Now, I think with the Trudeau government, if we can get the Trans Mountain built, that's probably going to be as good as it gets. But one never knows, and things can change quite quickly. And who knows, Jim? Maybe there'll even be a shakeup in the Liberal Party leadership not too long, because Mr. Trudeau's performance over the past few months hasn't been that impressive. When you look at how he's handled the China situation with Canada, that's certainly not gone over very well in terms of Canada's position there. We've been beaten up by the Chinese, I think, is probably one way to describe it. We have their ambassador writing these very provocative pieces in newspapers, and that's fine. They're playing in the sense that it's their right to take whatever strategy they want, but it's up to our government to counter that, and I'm not sure Mr. Trudeau has been up to that task. And so if he can't get on top of that, it wouldn't surprise me if there's some concerns in the Liberal Party about the direction of that party, because it just hasn't come to the plate on the oil patch. It hasn't been able to show that it's able to handle the China file. And China's a tough customer, but surprise, surprise. Of course they are. And it's up to Ottawa to defend Canada's interests. And if they're not up to the task, then what does that leave us with? It leaves us with having to make some tough choices in the next election, and maybe means the Liberal Party is going to have to make some tough choices in terms of its leadership.
We'll have more with Ted Dixon right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Ted Dixon. Ted, with the situation with the markets in such volatile shape, is it changing the face of the way people invest?
Well, in terms of what's going on in the United States, which is a big market, we're seeing a shift back to growth stocks, which is kind of like the bad old days for value investors. Like they had this dip here in December, and all of a sudden you started to see value emerging in the U.S. market. But already now with the Fed saying, well, look, we're probably not going to raise interest rates. Now you've got investors kind of probing value growth stocks again and seeing how high they can push stock prices. So the S&P 500 is now back over 2,600. I think it's 50-50, based off of our indicators, whether it can stay over 2,600. But, we're seeing growth stocks leading again, value stocks. There's two ETFs in the United States. There's the iShares Russell 1000 Growth ETF. That's the symbol IWF. And then there's the value version of that, the IWD. And over the past month, we've seen the growth in the ETF outperform the value. Well, what does that mean? Well, it means back to the bad old days. It means investors are scrambling for growth stories. They just don't believe that the economy is filled with growth. If they believed that there was growth everywhere around the corner, you wouldn't need to go scrambling for it to buy high-priced growth stocks. You could buy the cheapest stocks in the market because you would assume that they're going to benefit from a growing economy. But that's not what is happening. We're seeing a bit of a return to growth. So that's kind of I guess that's the disappointing part of the Fed pulling back on its rates. We're getting a test of the bad old days, at least for value investors. We'll see how far that goes. On a positive side, though, in Canada, we've seen the Canadian Insider Index, which is kind of an index that favors global growth. And what I mean by that, I mean in that it's geared towards an uptick in global growth, so that the companies that are in that index, many of them are exposed to the global economy, so they would do well if the economy is in fact growing. That started to outperform the larger cap companies, which are perceived to be a bit more safer during these during troubled times. And you want to see that. You want to see sort of these stocks that are more sensitive to global growth. You want to see those stocks starting to outperform. So we've seen it now for just over a month, but we want to see more. So it's still early days in this recovery. We've put in these lows on Christmas Eve. Will we go back and test those lows? It's possible. In Canada, our indicators are suggesting that we're in for a period of consolidation here, and it'll give investors a chance to look for those companies that have good value, good growth prospects. And so investors should probably start making their lists. Certainly, if you don't have any exposure to the energy sector, as we talked about earlier, look, there's been so much bad news that having a zero weight to energy right now doesn't make much sense. I think there's a risk that could surprise on the upside, if for no other reason that the global price of oil continues to grind higher here once we work through some of these immediate trade war problems and growth scares of the Fed raising rates. So in Canada, it's maybe consolidation time. In the U.S., it's figuring out, okay, is it growth versus value? What's going to lead if there is a push higher, what's going to lead the charge? And the problem, Jim, if we get back to this growth stock story leading the charge, what's that going to lead the Federal Reserve to do? Well, they're going to think, okay, the market's back on its feet again. We can start raising rates again, and then we'll be right back to square one. So it's going to be an interesting few months, and I think it's going to be a volatile time for investors. Don't assume that any trend that's happened in the past month will continue for the next month. We're very, very sensitive to Fed headline risk. And of course, we're very sensitive to what happens in Canada, to not only the United States, but also what happens with the Chinese economy. It's got, if it is able to get back on its feet, and they're doing a lot to try and stimulate it, that'll be positive for the Canadian market. So we got to keep our eye on a lot of things, and there'll be a lot of cross currents over the next few months. And right now in Canada, consolidation seems to be the base case that we're looking at.
We'll have more with Ted Dixon right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, you said consolidation might be the key in Canada. Well, we saw 2 mega mergers in the gold industry. What's that going to do for the junior miners?
Well, I think your guest on Discovery Watch, John Kaiser, probably said it best, that it's probably and I'm kind of paraphrasing what he said. So, but if your listeners haven't caught that show, they really should. But when you take out one of the majors, such as Gold Corp, who have been supportive of the juniors, it's going to probably have a short-term impact. But ultimately, Jim, it's going to depend on the price of gold. And we need to see gold continue to stabilize here and move higher. And that will be the key. And I think, in terms of what's going on in the large caps, I think the best managers and management teams of these smaller companies are just going to keep pushing ahead. And as long as they can have the gold price at their back, when they're back, they will keep moving forward. So, our indicators are suggesting that the gold group should still do fairly well here. That it's had a lot of bad news over the last few years priced in. So, I don't see these mega mergers impacting the juniors much at all. There'll be some impacts, but generally we need to see the gold price continue with some momentum higher. That's the key.
What's going on with marijuana right now?
That's an interesting one. That's our indicator is very positive on that group right now. It's shot back up, and it kind of mirrors this story in the United States where investors are flocking back to these growth stocks, and it looks like we're seeing a similar situation occur with the beat-up marijuana stocks on a selected basis. So I want to caution that this doesn't mean I think that the tide's going to lift all boats here. I think for investors that are still in that space, you have to be very, very picky. You have to be quick on your feet to identify where value is going to be. But I can tell you that in terms of our screens, some of the bigger names that everyone here has heard about are not very positive. So I think where there's opportunity in that space is limited to some of the smaller companies, and I mean some. Again, it's a case by case basis. There's going to be a lot of small companies that don't make it. So if you're going to be in the space, I think you have to have your eyes wide open. about the pitfalls, but also the opportunities. And where we're seeing some of the opportunities are not in Canadian-focused suppliers, Canadian-focused producers, but ones that are more internationally focused. That seems to be where most of the positive insider activity is taking place, not so much those servicing the Canadian market. I think that peak was around legalization day in October, and now it's looking at companies that are able to capitalize on opportunities beyond the Canadian market.
Ted, thank you so much for chatting with us.
Well, thanks for having me back. My
guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, his website CanadianInsider.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have questions for Ted or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.